Hi everyone, today is April the 14th, and we are 1.5 hours before the US session opens. I'm just doing some pre-market analysis at the moment to try and understand what went wrong with the recent call for this you'll see some of my videos from last month. It's about a month ago, 18th of March, where I was speaking about how, we have now come below this 20 moving average here, and how things should really start plummeting. But in effect, what happened is, although I did expect kind of a reversal up till kind of 6,650, I think that was the mark that I gave, 6,650 about here. Uh, I was actually selling off at these levels, so you can imagine how frustrating it is to see this rally just continue right into what is likely to now test all-time highs at around 7,000. But is it? Is it? Now the issue is the volume indicators are not working right now for whatever reason. We can't get volume selected, or so that means VWAP's probably down as well. Let's see. Well, how interesting is it that all of a sudden everyone's looking at volume and it's not working, but that might just be a bug anyway. So anyway, just some thoughts to recap. Why did I say back then that my opinion was for this to plummet? And it did actually come off. It came off significantly. I think we lost about 350 points. Um, and I was expecting some kind of reversal, like I mentioned, into the 6,650 mark, but certainly not where we are right now. This is an anomaly in many respects. One, because the fundamental data around CPI inflation and the unlikely reduction in interest rates, and the fact that the Feds are pinned to where they are right now, that's fundamentally a main reason why we are due for some kind of collapse. But obviously, we've got the war and we've got everything else going on. Um, which makes little sense why we're seeing this strength. And I'm going to also talk about volume from what I saw yesterday. But some of the key things that I'd like to remind us of is that this bottom line here is the 400 moving average, this orange line. And you could see in previous crashes back in 2018, we came to 17.8%, or let's call it 18% of that. We came 18% away from the 400 moving average. So it falls enough, but there's still this gap. COVID obviously was an exception because everything just crashed then, but it did come off its 400 again. So interestingly, this 400 moving average is a significant psychological level and likely to be a significant liquidity level as well. And then over here again, 15, 16% ish, broadly around the same numbers. It crashes usually down to its 200 moving average, and then it can come down further to its 400. Let's see what happened last year. 21%. Okay, and actually there was another one here, right? That was I'm not sure if that was the yen carry trade issue, but let's see what that looked like. Yeah, it's about 24, 25%. So yes, the gaps have grown a little over the years, but they are still broadly consistent. You could see that they stay consistent for the prior years. So you can see there's not much movement between that, and then again there's not much movement between 23. It's October 23, which is kind of 23%, and then over here we've got. Let's take that up a bit because it's nearly 23% as well, right? In fact, that's probably just over 23%. Yeah, 23%. So these two crashes are broadly aligned. And then we have what we have here now. We're at 52% away from that psychological level. So I'm not saying that this is the reason why things are going to crash, but we've got some key psychological levels here which demonstrate a possible reason why we should see things at least adjust to test these support levels here, right? About 6120. So I'm still of the opinion that this rally is false, especially this week. If you look at the volume data between the 9th of April, so this is showing the 6th, but the volume data, I haven't got it in front of me, but you can look at this yourself. Look at the volume data between the 9th of April through to where we are right now. The volume is actually thinner compared to its last 100 days. Uh, and so, sorry, I beg your pardon. It's thinner compared to since the start of the month. Yeah, and sorry, I'm taking the percentile from the last 100 days. But yeah, it's thinner. I think the last big volume that supported this rise here was actually on March the 31st. So this rise was supported by volume. You could do this yourself. All of these rises actually, which I said should go into the 6650, was supported by volume. So we had that. But these rises here are not supported by volume. So we have an anomaly for whatever reason. Now, what is that reason? Let's try and investigate that. The reason I believe is that we are now in earnings season, and being in earnings season, stocks want to kind of motivate that positivity, and there's always positive sentiment. So if we look at the FANG stock, so this is the FANG index, I'm a fan of this, and we could see that things are stretched over here. This is where the stretch is taking place, all right? And we are quite a bit overstretched as well. So the yesterday we had news of Nvidia looking to come into the world of they're taking over some computer company or something. I haven't looked at it myself. I don't think it's been released, but if it has, I've missed it. But they're so computing stocks like who is it? Like Intel and sorry, not yeah. Goodness me, the stocks slipped my mind. Um, but there's oh yeah, HP, Dell. I think they took a little bit of a uh, let's see this. I think over the last few days that although Dell isn't a FANG stock, it would just be interested to see. Oh, there's they hardly move, right? Oh, that's 5 minutes. Let's see this over one day. See what's been. Yeah, so I think this had a little bit of a run up as well because there was some rumors going around that uh, Nvidia want to take some of this. This is also the chip sector here. You could see that there's just too much strength, too much underlying strength. So this is clearly carrying the SPX, the S&P higher. But again, the fundamentals will come to align. That's what's always going to come back. Now, how long this AI bubble is going to run for, I don't know, but it has to. Look, I'm not permanently a bear. I like seeing stocks go up. I enjoy seeing value being created out there, but it makes no sense that we are at these levels. It makes no sense that we're testing this. So I'm going to stick by and say the two things. I'm accountable by the end of the year, so I'm not running away. I'm going to stick by and say that by the end of the year, we are still looking for something along these, where are we? Around the kind of like 6,000 level, sorry, about 6,100, or even 6,250. I think that was my target, but let's keep it about there. That's what we're looking, these are the kind of levels I expect to see by the end of the year. Um, but we've got to see some kind of crash up till, it's quite frustrating that we're not seeing it because, we want the deals. We want to be buying some good stocks. And the year's running away and we're not seeing those deals. So I'm still hopeful, still expecting. At the end of the day, it is only 250 points, but it is a lot. That's still a lot of points, right? Above where I was expecting it to start crashing, which was about here. Sorry about there. So let's expect to see that. I'm still adamant we are going to see that, but it may not be for a few weeks until we're well into earnings season. We get some indicators of what's happening with those other competitors. They'll reveal what's going on. I think TMSC are announcing tomorrow, or I'll have to check. So that might move the markets a bit. So in conclusion, we're still coming off. I still believe we're coming off. We may test all-time highs here, 6,990, going into 7,000, 7,000. I think it was 7,028. We were testing, but I think we're going to come off that. And the higher we go, the harder we fall, especially when it's not supported by volume.